Hello, Brian Shannon here from AlphaTrends.net. Today is Thursday, the 26th of February, 2009, and we had further selling here today. Looking at the NASDAQ 100, you can see we're down 80 cents or 2.8% today. The market obviously remains badly damaged, and I was saying yesterday that it seems like a real downside flush out is getting closer. And I was actually surprised that we didn't get even further downside than what we saw today, although it was a pretty damaging session, especially when we had the earlier strength. We'd seen that the market gapped up, kind of pulled back a little bit, attempted to rally, wasn't able to get up to yesterday's high, and then we had a pretty steady sell-off here with lower highs and lower lows, which was below the daily VWAP from about 11:30 Eastern on. It maintained below that daily VWAP. So the market, again, is back down below 28, which a lot of people have been looking at, but more importantly, it did close at a new low for the year as well, and I think that we now have to put our sights on this next level of potential support near 27, and it's quite possible that we might just continue down through that and go on to test the lows. So we remain in a very treacherous market. If you're trying to look for a reason to buy, there is none there on the daily time frame. Of course, the weekly time frame, further reason for concern. And if you take it back to a monthly time frame, here's where we are in this larger scheme, that up near the 2002 highs, and not the 2002 highs, but from where that move really began, this level of resistance here, we're down through that, and it's looking like the 24 area on a monthly time frame looks like the next bigger level. So it's a long ways away. It seems like a long ways away, but that's 4 points, and it's still reasonable in here. So don't think it can't happen. The market remains guilty till proven innocent. Obviously, the levels that we were looking at as far as the market needing to clear were $29.30 right here, which it obviously didn't do. And the bigger level above that was this $29.60. So the market flirted with those levels again today, was rejected. We still have a declining 5-day moving average. And as I was saying, it's more the direction of that moving average than where the market is in relation to it, as far as it giving you an idea of who has control of trend in this intermediate term time frame. That 5-day moving average, the direction of it, gives us more to act upon, that is, or more reason to distrust a rally rather than where it is in relation to it. Let's take a look at the financials. The financials were up today, and this is they've been outperforming rather the last couple days. Obviously, on any bigger time frame, they are the clear leaders to the downside. So I don't think you can read too much into the relative outperformance here of just the last couple days. We did finish above the January closing lows, though, so that might have inspired some confidence amongst some people. But when we look at a 10-minute time frame, the bigger level of potential for support is we were looking at was about 750. I still think that 750, 760 level is going to be important for this market to hold. We have had a little series of higher highs and higher lows, and right now you can see that yesterday's, or the resistance from Wednesday, or Tuesday rather, did act as support initially, and then once again in here. I think when you break below $8 a share, you're going to lose that trend line, and then you could see this test of $7.60. Nothing in here to indicate the market has made a bottom. Bottoms are a longer-term process that takes a lot of time. This is nothing more than a bounce within a downtrend. As far as the levels of resistance, we saw that it actually got above this level that had been the place we'd found sellers on Wednesday, and rallied up to these levels here at that $8.60 area. So hasn't quite completed to fill the gap in here. This would be our next potential level of resistance. Then the $9.40 level has been an important area as well. But I think that it's more likely that you have to look at this as a market that's likely to come down and test that 5-day moving average at a minimum. And if we see that the NASDAQ gives up this bigger level and really falls off the cliff here, then I think that there's maybe the financials are starting to stabilize a little bit first, but we need this bigger level of panic in the broader markets before we can build a sustainable rally for more than a couple days. People will say, well, it was down on light volume, and relative to yesterday's move and the 20-day moving average, it was about on the Russell 2000 here. It was about average for the last 20 days, but the Russell 2000, as I pointed out yesterday, looks like it's building this little pennant, and it's just a broken market here. We've got a big level of resistance up near that 43 level, and it just still seems inevitable that we're going to get that knockout punch that brings us down to test this low, if not go down through it. We've got on a 30-minute time frame, we've got still these lower highs in here. We can draw a little trend line off that. We've got the declining 5-day moving average, and the market's extended to the downside, but that doesn't mean it can't keep going lower. The 39.5 level, I thought maybe if that is given up, that we would see the next shoe drop. It was a little extended when it got down towards there. Maybe we get a little bit of rally up towards the 40 level, and then we get a big drop. Hopefully it doesn't gap lower, because as I've been telling you, I'm doing nothing more than day trading in this market. The overnight risks are too large when they gap in both directions. And you could look at it and say, well, can't you just sell short and hold? If that's your comfort level, then that's what you ought to be doing. And everyone has to approach the market according to the way that they view it in terms of how much risk they want to take and what their overnight exposure is and that sort of thing. I think that just because the ranges have been so big intraday that there's no reason to expose yourself to overnight uncertainty. If you can trade these rallies and sell-offs, in particular, when you get the triple levered funds, and I've been talking about those a lot lately, and they're not appropriate for everyone. I'm going to post a video about how the math works, because that's still something that confuses a lot of people. In fact, I also want to point you to my blog, alphatrends.net, especially those who view it on YouTube, because there's a lot of talk about this trader tax that would put a 25 basis point penalty basically on any transaction amount. If this were to pass, every $100,000 worth of transactions that you make would be taxed $250. So on a round trip of, let's say, 1,000 shares of a $100 stock, you would basically be paying $500 extra. To me, the letter that I wrote to the congressman was, you guys don't understand the market. The big problem with these markets right now that has gotten us here, the headlines, is liquidity. If they were to tax at 25 basis points every transaction, I know my activity would grind to a halt, and the market would, just the people that I know, the market would lose hundreds of millions of shares a day, and our markets would basically cease to function. So make sure you sign that. You don't have to send them a letter, but anyways, just a little. I don't think it would pass, but you still want your voice to be heard. So the Russell 2000 still seems like it's on this precipice. It just, I don't know what it's going to take to really get that smash, and it seems like that smash is still coming. The only thing that would change my mind is some time correction in here. I don't see what would turn it around all at once. You always have to have stops in place just in case, but it's still looking very weak, as does the S&P 500. The spiders were down another $1.25 or 1.6% today, and we can see here it looks like a little, you can want to call that a little bearish flag, a little bearish pennant, whatever you want to call it. It's not a bullish pattern, that's for sure. Bigger resistance is at $80 a share. Looking at the weekly time frame, the test of the lows seems like it ought to be there. And here's, if we take a look horizontally where we are, let me just reconfigure that, and this video is going to go a little bit longer than I hope, so I apologize in advance. But here's where we are. We're testing these levels, and it still seems as though the highs from 1996 near about 68, 69 are inevitable. So maybe that's what it takes, and that's another 5-6 points away. So continue to be very careful in here. The risks remain to the downside, and nothing here suggesting any type of turnaround is coming anytime soon.